Good morning, everyone, and welcome to this morning's morning market review. My name is Russell Sharma, Senior Market Specialist at FXCM, and today is Monday, it's the 26th of February. I'm just going to go ahead and bring up our disclaimers, and I'll start off with the high-risk investment warning. I'll keep this on screen for a few moments. Another few seconds, I'll just keep it online if you can ever read through that. Okay, excellent. Let's bring up the next slide, which is our market commentaries disclaimer. Again, just have a quick read through that. I'll leave that on screen for a few moments. Hey Raj, good morning to you. Welcome. Nice to have you on the live stream as always. All right, excellent. Let's go ahead and take a look at the real rate. Okay, and we're looking at the weekly chart. All right, so I think this is an interesting chart. I think that there has been some evolution, so to speak, on the chart, some sort of development, and that is last week's candlestick. It looks as if it is a condition one. I beg your pardon. What's a condition one? Well, we're looking at potential reversals here, and of course, there's three conditions for what we call reference candle reversals. This is condition one. It's got the highest high in at least three candles, and then conditions 2 and 3 really revolve around price taking out the low of the reference candle, and the third condition would be closing below the low of the reference candle. So it will take a whole week before we can see if that is in fact the case. I want to draw your attention to Thursday. We're going to have PCE inflation, PCE, which is the preferred inflation measure for the Fed. The last inflation data we had was the CPI, which came in hotter than expected. Let's see what happens with PCE now. If PCE shows some sort of moderation, capital I, capital F, and then potentially we get the close below last week's low, right? And then perhaps we'll start getting the yield to move in that southeasterly direction. Take a look at the RSI. The RSI looks as if it's just about a dip below 50. Well, below 50 would be the bearish side of the indicator. In other words, a measure of momentum, and it would be a show of bearish momentum. In other words, a downside momentum of the real yield. So I think that's a very interesting development. I think it's a good development because we have been looking for yields to moderate in 2024. The problem is they've been pushed back from March to May, and now we're looking at June for the first rate cut. And I think that I've argued that we've probably at the top of the current cycle in terms of yields. I'd like to see it come down, and I'd like to see that RSI drop below 50. And the reason for that is once we get the reference candle to the downside, once we get the RSI pushing below 50, I think it's going to take the dollar with it. Tends to be a driver of the greenback. And if it's taking the dollar with it, then we can start looking at the other majors and seeing if those other majors are starting to move up, right? If they started to tick up. Hey, Anna, good morning to you. Welcome. So this is going to be an interesting week for the real rate. Now let's just take a look at the dollar, given the fact that we've got a potential condition 1 of a reversal here. So I'm just going to click on plus here, and let's bring in the US dollar underneath that. All right, and let's perhaps take the RSI out. Okay, and what we can do is we can put in a arrow 2 weeks back for the US dollar. So here is condition 1 for the US dollar. So 2 weeks back, we got a potential condition 1 for the US dollar. Last week, we've got the follow-on on the real yield. And here's condition 1. Now, let's just take a look at, this is going to be quite an interesting measure. It looks as if we've got condition 2. I think we need a little bit more downside momentum in the dollar to really conclude that we have a condition 3. But what we can do is we can just do a measure of the numbers. So the low here is 12,990, and the close, yeah, it's 1 point above. It's 1 point above a reference candle reversal. So we don't quite have the reference candle reversal on the US dollar yet, but we've got condition 1 and 2. Now, without condition 3, we don't have anything. Condition 3 is an absolute necessity. And we've got condition 1, yeah, on the real yield. So let's just sort of package this and conclude appropriately. It looks as if yields coming down. It looks as if US dollar may be coming down as well. We just need the third condition of the reference candle reversal. Okay, so if there is moderation in yield, if there is moderation in dollar, what's that telling us for the risk markets? Now, dollar is a safe haven. If money's coming out of the US dollar, I would expect it to rotate back into the risk markets, which is interesting because the risk markets have been flying anyway. They've been flying high. Let's take a look at the S&P 500. Okay, and just sharing the tab with you. Let's zoom in here. All right. We've spoken about the S&P 500 for quite some time. It's really overbought. We've concluded that in the past. The idea here is, well, is it going to reverse? I think at some stage it has to reverse, okay, because of the overbought condition. But the idea here is, are we kind of, is it like a Jenga tower? Are we going to see the S&P 500 really collapse down? What's been driving the market by and large, the S&P 500, one would think is the AR story. And the question is, well, is it really just the AR story? And I'm going to argue that it's not just the AR story. I think that by and large, this is a healthy movement up in the S&P 500. And the way I'm going to make my case is we're going to look at the equal weighted index as well. So let's just understand the difference between the S&P 500 and what we call the RSP, the equal weighted index. The S&P 500 is what we call a market cap weighted index. It's driven by the companies with the largest market cap within it. And if you take a look at the top constituents of the S&P 500, it really comes down to the Magnificent Seven. I'm actually going to say the Magnificent Six because Tesla hasn't been performing particularly well, but the Magnificent Six has really been supporting the S&P 500. And it's got to the point where we are overbought on this market cap weighted index. But look what happens when we change it from SPX 500 to the RSP. So let's just take SPX 500 here, and we'll just type in RSP, and you can see RSP is a S&P 500 equal weighted ETF. So let's just go ahead and click on that. And now we have a really different story. What we're looking at, we're still looking at the same 500 companies. I think it's actually 501. But the idea here is we're not giving sort of credence to the top cap stock. We're not looking at the top capitalization constituents. We're looking at these now on a level playing field. And what do we have here is what we can do is let's go ahead and put in our peaks and troughs. Okay, so let's start off. We'll put in a trough over here. All right, let me just make sure we can all see it. There we go. And let's put in our reference peak. Okay, so I get it round about there. So we had a really strong swing from the end of October all the way through to the end of December. Okay, so a two-month swing basically. And then you've got this pullback. Let's move the arrow out. Okay, you can see here, what do we have here? Here we have what we call the higher peak. Higher trough. Must get my peaks and troughs in order. Right, a higher trough. I'm just going to go and mute for a moment. I can just feel a cough coming. I'm begging your pardon. I beg your pardon. Okay, so we've got the higher trough over here. And once we've got the higher trough, we can put in the higher peak. So you can see that on an equal weighted basis, the 500 stocks, or the 501 stocks, are really looking healthy. We've got this higher trough followed by the higher peak. Here's the reference candle at the higher trough. Condition 1, and here's condition 2, 3, and now we're swinging up. So what are we saying here? What we're saying is that if there are overbought companies, which there would be on the S&P 500, not on the RSP, on the normal market cap weighted S&P 500, if there's going to be profit taking there, if there's going to be a pullback there, it's probably healthy and probably worth keeping an eye on to see if you can buy in on the dip. Why would we do that? Because we're looking really healthy on an equal weighted basis. And you can see we're not even overbought on an equal weighted basis. We're really top heavy on the AR story, on the Magnificent Six. That's really where the heat's coming from, isn't it? So on an equal weighted basis, looking really, really healthy. At this stage, if there's any questions, go ahead and type those in. Any questions, go ahead and type those in. And what we can do is, let's just take a look at the DAX. The DAX is also a market cap weighted index, by the way. But given sort of the way the US market is looking, the US market offering some sort of leadership, let's see if the DAX is taking advantage of that. So what we'll do is, we're going to change the RSP here. So we'll do a top-down analysis, and we'll just put in the ticker for the FXCM DAX CFD. So let's bring that up. Okay, and this is looking, I think, pretty healthy as well. Now we have put in the reference candle reversal previously. Here is condition 1. Here is condition 2, 3. Then we talked about 2 weeks of moving sideways, and then we really got the swing that started off over here with the reference candle reversal. And it just shows you the power behind reference candle reversals. Reference candle reversals tend to tend to lead swings. They don't always manifest into swings, but if there is going to be a swing, okay, there has to be reference candles. There have to be reference candles. All right. Where is the DAX relative to the where's the DAX relative to the 30-week exponential moving average? Well, it's above the 30-week exponential moving average. Which direction is the 30-week exponential moving average in? It's pointing up. You can see we are sort of tending towards an overbought here, and I would suspect that is a symptom of the market cap overbought condition. So in other words, we're seeing it on the S&P 500. Well, we're seeing it on the DAX as well. Can we see a European index? Yes, we can. I just don't know if I can recall the ticker. Let's see stocks. Here we go, Eurostoxx 50. All right, let's take a look at the Eurostoxx. Here we go. All right, so what do we have here? The Eurostoxx 50, well, let's put in our peaks and troughs. Okay, so here is the trough. Let's put in the peak. Should be over here. So a very strong swing here. Where is the higher trough? Right over here. And that would be your reference candle reversal, right? Higher trough. Now, where is the peak? Here we go. So we've got the uptrend, don't we, Anna? High trough followed by high peak. Where are we relative to the 30-week exponential moving average? We're on top of the 30-week exponential moving average. Where are we in terms of the direction of the 30-week exponential moving average? Well, it's moving in that northeasterly direction. We've got the uptrend and we've got the trend following indicator showing us. What's the issue here? So the issue is, of course, we are overbought, aren't we? We are overbought. Now, I suspect, again, this is because of the not because of a broader index issue, but because of a market cap weighted issue. In other words, I think the leadership that we're getting from the US is and the global nature of risk sentiment suggests that when we do get some sort of normalization, and I would expect that at some stage we have to get some sort of normalization. The problem is we're looking at a weekly chart here, and a weekly chart tends to be difficult in terms of market timing because it can take weeks to unwind. It can unwind next week. It can unwind 2 weeks, in 2 weeks' time, 3 weeks' time, 4 weeks' time. The timing is not so easy on a weekly chart. If we go down to the daily, let's just see if we do. The daily does have an overbought component to it. So perhaps we can posit that in the near term, the heavy market weight overbought stocks would need a pullback. Would that be as a symptom of ill health, of bearishness? I would say no. I would say it would be natural profit taking. And I think that when there is that pullback, that's the time for us to look for evidence that there is dips in the uptrend. Okay, so Eurostoxx here, Anna, again, looking really healthy in terms of trend, just got that overbought condition that I think needs some attention. Okay, let's just take a look at gold, see how, and the reason we want to look at gold is just to see if it's building up some sort of momentum, given the fact that we have suggested that the real yield may be coming down. So this will give us sort of an extra clue in that sort of in that type of discussion. So let's just go here, XAU USD, okay, and let's bring that up. Now, isn't this interesting? Isn't this interesting? Okay, in that you've got the reference candle. This is from 2 weeks back. It looks to have completed last week. In other words, I would suggest we've got a condition 2 and we've got a condition 3. Okay, and take a look at the RSI. We were looking for a breakout. We got it. Okay, we've got the breakout in terms of the RSI. Now that in of itself I would suggest would be a secondary type of signal, not a primary type. But the fact that we've got the reference candle reversal here, I think is telling us something. In other words, let's just kind of build a hypothesis here. Gold potentially moving up, yields coming down, dollar potentially coming down, and that providing some sort of support for a risk on type of environment. What do we do with the overbought condition? Because that seems to be a sort of a juxtaposition, a paradox within that type of hypothesis. Well, I think that has to clear. I think technically that has to clear. But I think given the favorable potential of the way the yield is looking, I think that any sort of pullback must be looked at in terms of a healthy dip in an uptrend, and we can see if we can exploit that. Okay, let's stop over here. Are there any questions? Please go ahead if there are any questions. Otherwise, we'll wrap up at this point. I'll just wait a few seconds. All right, nothing coming in. So let's wrap up here. If you found this useful, just go ahead and click on that boost button. It would be much appreciated from my side. I want to wish all of you a good day and a good evening ahead. And let's chat about this again tomorrow, same time. Thanks very much, guys, and speak to you then.